All right, welcome back everybody. Crypto Rolly here. Happy Sunday. A lot to talk about. We have the weekly candle close. We have the CME opening back up, so we have some gap talk. A little article on miners getting back into the game, doing live technical analysis, price predictions, and trading. So remember, these are my own ideas and opinions on the market. Please do your own research. Trade at your own risk. I am not your financial advisor. Smash that like, leave a comment, subscribe, tick the bell for notifications. Looking at the market, Bitcoin down a little over 1%. We did lose that 9,600 level we talked about yesterday, dropped off a bit, but still maintaining 9,500. Your real volume picked up a bit. We were under a billion yesterday, very typical slow Saturday. But overnight, getting that little bit of a sell-off, volume picked up, and we're seeing slight losses across the board. Crypto Fear and Greed Index, this was posted back above 9,600 before that sell-off, so it was still at a 54. We're in that neutral range. We're still in the same place we've been in for weeks. Are we going to have that major breakout? Are the bulls back in town? Bull market, bull run? Or is this the top of the rally and we're going to have a bit of a dump? All right, so article time. I have a little article. I thought this was interesting because after the halving, you usually do see a bit of a minor capitulation where miners are forced to sell. Usually the smaller mining rigs or smaller mining operations are forced to sell because they can't operate at a profitable cost. After the halving, it becomes twice as difficult to mine, which means twice as much electricity, twice as much the cost to mine one Bitcoin, and at the current price it just wasn't profitable for them, so they had to sell or turn off their mining rigs and wait. Now we have that 10% difficulty drop, so Bitcoin was designed for this, that they have the hash rate has this difficulty drop that makes it easier after the halving for miners to get back into the game. So we never really saw that major capitulation, and now it's getting easier for the miners to come in and now start to mine at more of a profitable cost for them. This is good news. We didn't see the major dump. All right, and now they're coming back in. So did we avoid the capitulation? Possibly. But let's take a look at the charts because end of the day, the charts are what matters. I do have to say I looked at the hash ribbons before this. You're just going to have to take my word on it. The hash ribbons have not flashed that buy signal yet, and when they do, I definitely will let you know. When the hash ribbons flash a buy signal, typically a good macro signal, okay guys? But I don't want to spend too much time on that because we do have a lengthy video for you. Let's take a look at the CME real quick. Basically, the CME closed around 9,800 on Friday, so that looks like right around here. Bitcoin current price beneath that, so that was going to be right in that level. You'll have a small gap above. And the critical thing I was looking at here was also that the CME was putting in a rising support trend line here, and I was concerned that if we dropped over the weekend, would we open up above or below that support trend line? You can see here we had a similar situation. You can see it more clear on the 4-hour where Bitcoin actually opened up below that support trend line, and it did come up to fill the gap, but when it filled the gap, it also was rejected by that trend line. You often see this happen where you have a support flipped resistance. So it was flipped as resistance, and we were able to close the gap at the same time. So I was saying over here, if we happen to open up beneath it, you could see a similar situation where you actually come up to fill the gap, but then get rejected by that resistance and then start a downtrend. All right. But at the current price, I believe we are going to open up within there, still above that rising trend line. So possibly we open up inside above the rising trend line, fill the gap, and we can continue higher. You're looking at horizontal resistance on CME bit of a fake out there, but we didn't drop lower, still maintaining this uptrend. Okay, so that's the CME talk. Let's go over to my Bitstamp chart and take a look at the weekly, because we do have the weekly today. We'll take a look at some of those indicators on the weekly. Most importantly, our moving averages were still above all moving averages, and your blue 10 simple looking to bullish cross above the 21 EMA. And, above the 21 EMA is classically a bull market. So as long as we're above there, I have to keep a macro bullish bias. Of course, you can have on lower time frames, you're going to have swings up and down, but I'm going to overall just be looking at the charts more with a bullish eye, basically meaning I'm looking for more longs than I am looking for shorts. Below the yellow 21 EMA, maybe I would switch over to more of a bearish bias, looking more for shorts instead of longs, okay? Just, a bias. It doesn't have to be like 100% bull. You have to be aware of that up and down flow, okay? But that's, what we're looking at, still looking bullish there on your moving averages. Now, the Ichimoku cloud, we were interested to see if we could close within the cloud. As we stand now, it is, an indecision, wicks on both sides, doji type candle, but it would be qualifying as a close within this cloud. The bottom of the cloud here is 93.73, so if we close at current price, you would get that close in the cloud, and then possible extension to the top of the cloud coming in around on the next week's candle close. That's going to be 10,000 or 11,300. All right. So one step at a time. We were struggling to. We did close in the cloud here, and then was rejected. Weren't able to close in the cloud here. So, we're trying to break back in there. We could see that this was providing resistance here. Now we're trying to break that resistance. All right. Our stochastics are interesting too, though, because the fast moving stoch is still coming down. We didn't get that cross up. We were looking for it. Now, if we closed up here, we would have probably confirmed that cross up. So right here as we stand, it got rejected there and still coming down. Your slow moving stoch is still rising but getting high. No hint. We'll have to see how the next weekly candle closes. Does the next weekly candle close hint at a cross down here, and this one continues down? That might signal that we might have a little more downside. Okay, so we're monitoring that on our stochastics. And then on the RSI, we were looking at this downtrend here that we broke above, bounced off of it, but we're putting in another lower high, and if this comes down, it's still a possibility. So we're watching that as well. We were looking for a breakout on the RSI. It was looking good, but, stalling at the moment. So that's our weekly. That's what we're looking at as far as the indicators there. Something I want to do real quick, I want to do it at the top of the video, is we look at the Heikin-Ashis. I haven't done this in some time. Now, the Heikin-Ashi on the weekly is actually still bullish. We'll have to see if you get like a reversal on the next weekly, but these are still looking bullish. I want to point that out because if you start looking at your lower time frames, going to the daily, you're putting in a bearish one here. You're putting on the 12-hour, you're putting in bearish candles here. On the 4-hour, also putting in bearish candles. So I can't get too excited as a bull when you have all of the, I'm going to need the 4-hour to get turned green, and this is a good trending indicator. You can see you get a nice little rally once they turn green, or once they turn red, you get a bear rally, for the shorts. So once this turns green, and then your 12-hour turns green, and then your daily green, I can feel more comfortable. But right now it looks like a potential pullback. However, the weekly is still looking good here as it does above those moving averages. but the stochastics also hinting down. So we have to be careful here. And above everything else, we've been looking at these horizontals, and we've hit that major resistance. And, typically you sell resistance, buy support. So this isn't the time to be going all in. If we can break above 10,500, I'm not telling you to go all in then either, but we can feel more better about, this breakout or the bull run going into the end of 2020. All right. So taking a look at our horizontals right here, let me get in a little bit closer. We can see that 9,800 has been stiff resistance for the daily candle bodies. We haven't, had a hard time closing a candle body above that. So you want to see 9,800, a daily above 9,800, and then 10,500. 10,500 was the previous top here as well as here, and we've had plenty of price action in this range as well. So we knew this was going to be a tough level. What I can say though is we were rejected hard pretty swiftly here. We were rejected here, and here we keep pushing up. You're still maintaining these this higher lows ever since back here, low, higher low, higher low, higher low. And then since we've reached that 10K level, we're still putting in higher lows, and you can see that with this rising trend line of support. So yeah, we could come down. 9,200 has also been an area of interest. You could see the previous resistance support flip there, and once we broke it, we had a nice breakout there. We had a support here, bounced off of it there. So if we do continue down, 9,200 could be a level that we bounce from. You can see also the resistance there, and it might match up with this rising support trend line. So in the short term, looking at those Heiken Ashes, we could keep coming down here, but on the macro, I'm still bullish. So that's it's a difficult situation. It's not a difficult situation. It's a time to be patient, and that's something that I want to talk about too. With trading, you have to identify these times to be patient. If you're scalping on a 15-minute and that's your style, then that's your style. For me, I find the 4-hour to be the lowest time frame that I want to look at for confirmations. And, if your daily is contradicting your 4-hour, you need to be aware of that. So you have to have some patience. And something that's been helping me with that patience is looking at other coins or looking at the stock market, looking at other assets. Because when Bitcoin is the only thing that you are trading, I feel like FOMO kicks in more often because you feel like you always have to be in a trade, and you will take a setup that might not be good, where if you have multiple assets moving, different, like one going up, another going down at different times, then you could always be in a trade, but it doesn't always have to be Bitcoin. So it allows you to look for different setups. And what I've been looking at is the stochastic crosses, 4-hour, 12-hour stoch crosses. And I think, you can scan through your altcoins. A lot of the cryptocurrency coins move with Bitcoin. So it might be hard to find something moving, out of sync or, at a different rate. Pretty much they all move to the same. But if you look at the stock market or you look at different stocks within the stock market, you're going to see, different coins or different assets moving differently. So you can scan those, and what I'm looking for is, and we're close to seeing on Bitcoin, is a 4-hour stoch cross up from the bottom. And I have my fast moving stochs and my slow moving stochs, right? Typically, if you can see a 4-hour stoch from cross up from the bottom, both with the fast and the slow, you usually have a nice little rally there. You can see back here, you can see this rally. You had that it was a low cross up there, and then the slow followed from towards the bottom. Doesn't have to be the absolute bottom, but towards the bottom. Nice rally. You also had that here, okay? And you can see also that when these happen, your 4-hour RSI is low. So you have a low 4-hour RSI, low Stokes, and then they all get a chance to move up. And you can see that one here, the RSI was low. So on our 4-hour, the RSI hasn't gotten oversold yet, but it is starting to get to that lower region, and your 4-hour Stokes are both getting low. So if we can see that 4-hour Stoke cross up with a bounce from this lower region, that could be a good signal for our next leg up. So basically you would go and you would look at, different assets that way. You can, look at Link. Let's take a look at Link. Let me take off these drawing tools here. So Link looks pretty similar there, but has some room to go, I would say, as well. Your 4-hour Stoke cross down, RSI is low there. Ethereum, let's take a look at Ethereum. These are all pretty similar, as like what I was saying with crypto. Tezos, Tezos is really low there on the Stoke. So, and here as well. So when this one finally breaks up and you get that bounce and you break that downtrend on the RSI, and break this downtrend on price, that could be the next leg up. You can see the last time that Tezos was low on the 4-hour RSI was back here. That Stoke cross up, and you had this rally there. So you can look at that. If you're able to trade other assets, and you're looking at like the stock market here, this is a little different because it's not open as many hours. It's only open about 6.5 hours out of the day, opposed to 24 hours. But you can see here this 1-hour Stoke, or sorry, let me move this over. You can see, so the RSI is super low there, your Stoke low, and look at that rally. So what we need to identify for a good trade is low RSI, low Stokes. And in order to really do this, it helps to have other things that you can trade. See, here's Twitter here, that low RSI, low Stoke, and look at that rally, okay? But when you're up here, yeah, you can get a nice move, but it's more risky. It's more risky when you're taking trades when they're up here and up here. You want to wait for that good opportunity, lots of room to breathe, okay? All right, so there's some trading. I wanted to talk a little bit about trading for a second, okay, guys? So that being said, let's do the rest of the breakdown. It's already been 17 minutes, all right? All right. Woo! I hope all that made sense, and I was going somewhere with that, right? So let's go ahead and look at Bitcoin. If you're looking at Bitcoin on the 1-hour, you can see that the RSI is low here, your Stoke is low. However, the 4-hour still have some room, so you might be jumping the gun here, okay? We might need to see this come a little bit lower there. And we can see that your 4-hour Stoke, slow-moving Stoke, possible hint, but you can see right here there was a hint at it. Didn't really get that confirmation. What happened there? What happened there was we did get that. It looked like we were about to break out, got rejected, and then we fell. So you didn't get a full confirmation, and you were rejected. So you needed to be more patient there, okay? But if you were looking at your fast moving, it did call that little bit of a bottom, and then it crossed back down. And now it's looking to cross back up, but you know what? It could cross back down while this continues lower. So you have to be aware of that. And you know what? This is another topic for trading. I think something that's important is when you enter, you look for a good setup, you look for confirmations to enter trades, but are you paying attention, say you enter a long, are you paying attention to that sell signal telling you that you shouldn't be in the trade? Like when it came to this point, were you still holding, or did you say, hey, looking at that, maybe I should get out? I think, if you're trading on a 4-hour time frame, I think each 4-hour candle, you might want to reassess that trade and think to yourself, okay, if let's pretend I wasn't in the trade and I'm looking to get in a new long, and I see this cross down here and I see that red 4-hour candle there. Would I take this long? No, I would not. So if I'm holding a long, maybe I should close that long. And that takes some discipline. You know, it's hard to close the trade, especially if it's a minor loss. You don't want to take any loss, but you have to be aware that on this red candle with that cross down, I wouldn't want to be in that setup. It looked potentially good here, but it doesn't look good anymore. So why are you holding on to it? I think it's important to reassess your trade consistently, okay? So that was another point about trading I wanted to make. All right, so finishing up with these moving averages here, we are sitting on the support 100 EMA at 94.87. We have that price gap on the CME is going to be up above here. So I'd like to see those 4-hour crosses above. I'd like to see us close back above your moving averages, coming in around 96.50, get a 4-hour back above all moving averages, get that bounce on the RSI, get those Stokes crossed up, and then look for your leg with more volume on the weekly. That would look better for me, okay? But right now, with the Stokes coming down, and then as we move on the daily time frames, everything's kind of hinting at a pullback still. It's kind of a risky situation here. But we do have the gap there, so we'll have to monitor that gap above. Going to the 12-hour real quick, on the 12-hour, you're below your yellow 21 EMA. We were holding support above it, which was bullish. Now you're below that 12-hour 21 EMA. So you got to be careful here. Looking at our Stokes, your slow-moving Stokes coming down. Your fast-moving Stoke still coming down. Your slow-moving Stoke is still coming down. You can see these Stokes were good on the 12-hour as well. You can see you were low on your RSI. You got the cross up there. You got your cross up here. Had a nice rally. So these are still coming down. All right. So, you know, that's why 4 hours starting to shape up, but this doesn't look great. This isn't my best trade opportunity. You know, your daily, the daily also, you know, fast moving coming down, your slow moving coming down. So typically all of these would be, you know, when these crossed down, all of these would have been good sell signals, and you could have played to the short side, you know, if you were looking for that. But on the macro weekly bull market territory, I'm looking for more longs than shorts. Obviously, you can see you could have had a nice short there too. But typically, you have more luck or better chances of success taking a long in a bull market or a short in a bear market, okay? But it can be played. And you know what, guys? You know, I'm putting a lot of emphasis on these Stokes, and I've been seeing them work well. So you know what? Maybe you can play these cross downs, but you have to be diligent in making sure that you're not stubborn in any of those trades. You know, on that 4 hour, when you see the Stoke cross down, you should have got out of the trade. You see that 4 hour Stoke cross up, maybe you get into the trade. You have to take them seriously. Some of them will be false signals, but I can see a lot of them are good signals. And of course, you want to take other time frames, other things into consideration as well with your resistance and your support levels. You can't trade on one indicator solely, but you can see that they're very powerful. All right. I am shilling the stochastics today. You can see I have two of them though, so you can tell I like them. And we looked at the weekly. All right. So that's all that 95.42. The daily, we didn't talk about our moving averages on the daily. Still above the 21 EMA on the daily. So if we get a close below the 21 EMA on the daily, which is around 94.47, you have your next support level at 89.64. You have this blue 50 simple coming in around 89.24. So the 8900s would be that next area of interest. This also lines up with, you know, that rising trend line. So you can see that green line there, sorry, a little lag on my lines, is lining up kind of the same general area as these moving averages. I closed those out. You can see it's the same type of deal there. So we're looking at rising support. You lose that. You lose 9,600. You bounce off of 8,400. You're looking at a new low. That would be the first low. So now that trend kind of changed, and maybe you get a bounce and then get rejected. So what happens there? You come down, say we do break down here. Maybe you get a bounce there, but then maybe you get rejected from there and then do something like that. So you start a new low and then a new lower or lower high. So high, high, lower high. Whew, I get tongue-tied sometimes. So that's what you would have to be aware of, and then maybe get rejected by that rising support flipped as resistance. So these are the things to watch moving forward. And I think that's it for me. I've done a lot of talking today. And I've gone blurry. Is it going to adjust? All right, guys. Anyways, I guess this is a good time for me to head out. I hope it hasn't been blurry too long. I will see you guys next time. Rolly roll.